Good evening, or good afternoon and evening. I'm be ahead of myself. Welcome to another information session with ParkTrent, and we have a wonderful product to talk to you about today. And it's interesting to talk to you about this product in particular because we've been doing business with Bill McNee. Bill is a Melbourne developer that's worked with ParkTrent over many years on many successful projects. And Bill's gone into Queensland. Now he's building one in one of the hottest spots in Brisbane City in Fortitude Valley called the Coterie. And Bill's, thank you for coming along to our office today in Wollongong.
Thanks for having me, Ron.
And being in our studio here, we call it Studio One. So you're very fortunate to come along here. And Bill's going to talk about his product and the wonderful advantage and naturally price point and also the future projections for growth from this wonderful development we have. Bill, I've been, as we all have, been engaged now with the election coming on and substantial changes that are going to be made there by either party, never mind who wins, Labor or Liberal win. There's going to be some changes, particularly that's going to affect investors in property. And the biggest change, which is, I think has got under the radar, is changes that's going to be made to the migration laws and the extra intake of migration we're going to have. And quite frankly, I travel as you travel extensively for Australia. Yeah. And I'm getting sick and tired of the congestion on our roads. You know, it's long overdue to have massive infrastructure spending to help and fix that issue up. And we're talking about more and more people coming into Australia. And I see my stats are telling me, and also the commentary I'm getting from various publications that we subscribe to, that the property market and also apartment supply in this country is diminishing rapidly. In fact, an article on the weekend from the Australian Financial Review tells us that up to 71% of all the projects that were earmarked to come online in 19, 20, 21, 22, 71% of them are not coming online. So I'd like to get your views on that first before we talk about your wonderful product.
Sure. Well, thanks for that great introduction, Ron. It is true that we've witnessed in the last 2 years particularly a lot of significant residential developments have been withdrawn from the market. We believe that this is ultimately going to lead to a massive undersupply and shortage of housing in the next 18 months' time.
Yes.
The reasons for that, of course, as you've correctly pointed out, is Australia's substantial immigration and population growth. We've seen 90% of projects that should be in construction now removed from the market. And that's because of various different reasons, bank funding and new government taxes and so forth that have been introduced. So a lot of developers, particularly in Queensland, have suspended projects and put them on hold. We've been very fortunate, Ron, that we are a very strong financial group. And we've been able to put our project into construction without any bank funding.
One of the few, I might add.
Yeah, thanks, Ron. Yeah, we are. And because of that, we are well underway with our project and it will be complete in November this year. So I believe that there will be a massive shortage of housing on its way sometime in the next 18 months. And I think it provides a very unique opportunity for investors and first home buyers to enter the market, particularly in Queensland at this moment, and capture that growth that I think will arrive between sometime now and the next 18 months. Further to that, we're very fortunate, you touched on infrastructure. We're really lucky that in the state of Queensland and Brisbane, and more particularly so in Fortitude Valley where we're located, that the state government have committed to very large infrastructure programs. So we're going to start to see the benefit of some of those works in the coming months.
Bill, my stats are telling me, and also the research that we've done, is the fact that nearly 60% of all the development that was scheduled to come online in Brisbane City itself are now not going to come online. So it means 60% downturn in property. But Brisbane's population, the city of Brisbane, is actually increasing by 1,000 plus a week.
Yeah.
So nearly 1,200 people a week moving into Brisbane. So it means that there's huge demand for rental properties.
Yep.
And if I look at the city of Sydney and the city of Melbourne, and we've been active in these marketplaces for many, many years, as well as Brisbane. But the city of Sydney over the last 7 or 8 years, property values in possibly right across the CBD and the outer ring has gone up around 70%.
Yes.
And Melbourne's the same in that period of time.
That's right.
100%.
That's right.
So, but it's come back now. Those both cities have been at adjustments of about 12 to 14%. So we're sitting back at a very comfortable, healthy situation for people to come into the property market. Brisbane did not have this growth. In fact, the all of Queensland did not have this growth. It's been sitting there, bumping along 2 or 3% growth over the last 5 or 6 years. So it's grown substantially. But now I'm finding more and more people are inquiring for investment opportunities, and people are leaving these southern states to move into Queensland because of affordability and job opportunities. In fact, to date, so far this year, and we're only in the 5th month, partly through the 5th month, the interstate migration represents about 24,000 people so far from the 2 major states, which is Victoria and New South Wales, going up there. So it's an ample time for you to be launching your product. And as I say, we've worked with your company, Vicland, for many, many years. We've sold many hundreds of your properties, and our clients have all been so happy with the quality plus. It's so happy quality plus. So what I'd like to do now is to talk about the products, specifically the numbers, the many stories you have, how many apartments in the block, that type of thing, and your pricing, and what can you offer to us, our clients, in this marketplace at the minute, because there are some wonderful offers out there from vendors and people selling their properties in this marketplace, understanding coming up to the election, the market is subdued somewhat.
You're quite right, Ron. It is somewhat subdued. We recognise that we've had a very, very close relationship for many years, in which your company has sold many hundreds of apartments for us over the years. We take a great deal of pride and comfort in the fact that most of your buyers have all made good investments with their purchases between our groups. Today we're here to make a very special offer with ParkTrent to continue the ongoing relationship and offer some real support to your buyers today. Ron, I've actually brought along my checkbook today.
I'm glad.
And I've signed 10 of the checks, which really gives you an open checkbook, if you like, to make 10 sales today as you see fit. So those checks are there today, they're signed. We want 10 sales, and we're going to leave it absolutely in your hands with regard to what offer, what special deal, or what a bonus incentive you might offer to any of your buyers today.
Wonderful, and I might coin a phrase here. Please explain. This is something that you need 10 extra sales. I take it. You're at the point of time where you need to get those sales.
That's right.
Settling.
Well, the building's progressing rapidly, Ron. We are almost complete, as I mentioned earlier. The building will be complete in November this year, and for that reason, the sales to date have been going very well.
I think we've done 20 over the last month or so.
Yes, that's right.
And the idea of this check now, you're giving me carte blanche to negotiate maybe stamp duty concessions, assistance with deposits.
Yes.
Or whatever.
Whatever you need, it's all up to you, Ron. At your discretion. And I do know that you've always used our money wisely, but you've also done it in a way where you get the best outcome for your clients. So we appreciate that and we respect it. We're happy to give you this opportunity today.
Thank you so much for putting that trust and faith in me, and I can rest assured I will look after you, but my priority is our clients. So guys, you're on a winner here. I've got the checkbook. But Bill, if I could just come back to you now and talk about some the issues that we might have, and we're understanding that the marketplace has had a correction, but Brisbane hasn't had any correction because it never rose that much. It's been bumping along a little bit. But now with the infrastructure spend that's happening up there from the state and federal governments, they've just overcome their state election. There's massive amounts massive amounts of money being spent on infrastructure, new casinos, new terminals for cruise liners, etc., etc. And the population of Brisbane is increasing by 60,000. I mirror this and I try to get a gauge on where our cities are going. And so far in my investment cycles in my life, I've been quite accurate in picking the marketplaces. I picked Sydney 25, 30 years ago and sold hundreds of properties in Sydney. All our clients have done very well. Then when Sydney started to get expensive, I picked Melbourne, so our clients have done very well. Now I think the opportunity is for the northern state, and particularly Queensland and Brisbane. I think our clients will do very well. And how I've mirrored that and got that, my crystal ball, I've looked at major cities around the world, such as London, which has 9 million people thereabouts, and I mirror Melbourne and London as a similar sized city. And what's happened in London over the last 100 years, I think is going to happen substantially in Melbourne over the next 50 years. And then I look and I marry Sydney up with New York. And I say, well, Sydney and New York are quite similar, and we know what's happened to prices of properties in New York. You can't buy anything there for 100 to 5 or 6 million, and some of the properties there go for hundreds of millions of dollars.
That's right.
And then I say, where does Brisbane sit on the global scale? Where do we put Brisbane? And what city in the States in America is flourishing right now? And it's a similar city, much the same geographically, of oceans and waters all around, is San Francisco. And San Francisco's population is increasing. It's got about 900,000 people there right now. It's increasing by nearly 4% a year. And it's because it's affordable. It's got great lifestyle. It's got the waterways all around it. And I think Brisbane and San Francisco are similar type cities. So what I'm saying now is, hey, Sydney's been expensive, still good opportunities yet for investors. Melbourne is still a good opportunity, but it's expensive. And we have just been discussing this morning some projects that are coming on in Melbourne CBD because of the scarcity of future projects. And we've been talking about the pricing today, and we're amazed at the pricing that's coming on. And we don't want to talk about which project it was, but Bill, if I was interested in buying a 2-bedroom, 2-bathroom, good sized apartment with a car park in Coterie, how much would it be worth? Just off your top of your head, could you just give me a price on that?
Sure.
2-bedroom, 2-bathroom car park?
Well, I think you could safely get an apartment of that size and description in our project, Ron, for below 490,000. So
My goodness,
it's exceptional value when you look at some of those other cities that you've described and talked about, such as Melbourne and Sydney, for example. There's a huge, I think, migration shift from Sydney to Brisbane for all of those great reasons that you pointed out, such as employment and lifestyle and affordability.
If you're looking at Fortitude Valley, you'd have to mirror that up with Chatswood in Sydney and Toorak in Melbourne. So if you're buying a 2-bedroom, 2-bathroom and a car park in Chatswood, the car park would be nearly worth $490,000.
And similar in Melbourne.
We have got projects in Melbourne now, Bill, 2-bedroom, 2-bathroom, 79 square metres. What would your 2-bedroom, 2-bathroom be in size?
It'd be very similar in size.
Well, it's 2-bedroom, 2-bathroom, no car park, $1.9 million.
Wow.
They don't have the checkbook. I've got the checkbook.
You've got the checkbook.
So I can do a deal.
You can do any deal that you want.
Oh, don't say that. It's too much responsibility on me. But I'm going to be generous with Bill's money. I'm very good at spending other people's money. I'm very good. So isn't it amazing that the price differential, but I can assure our viewers and the people that are logged in today that you will not deliver a product that they're not 100% satisfied with the quality, the size and the location. You're up there because you bought the site at the right money. It's in the Butte location. It's 1.2 kilometres from the CBD of Brisbane. It's 12 kilometres from the airport. And if you haven't been to Brisbane, let me tell you, Brisbane is a city that's got everything there. It's ultra modern, brand new. It's just absolutely wonderful. And these apartments, price just on the monitor now, Bill, starting at $344,200. It's a 1-bedroom, 1-bathroom, I take it. And they go up to 400,000 I see on your prices for 1 bedroom,
That's
1
right,
bathroom,
right.
depending on what level. It's 25 levels of residential, then you've got a sun deck all up the top that everyone can use.
Yep.
Al fresco, it's got a pool, it's got a gymnasium, and these things are needed for the people that will be renting these apartments in Fortitude Valley. The people that live in this area are high qualified people. They're doctors, solicitors, accountants, dentists. Those type of people have large incomes, and they want this pools, they want this gymnasiums, because either that they've got to pay for gym fees outside, it's in their place of residence, and this adds value and also will make the rents very strong.
That's correct, Ron. In furtherance to that, we are extremely confident in our product and our price point, and we want to also give this guarantee to any of your clients only, and that would be a valuation guarantee. So that means for anyone interested in buying our product, we're so confident in our pricing that we will offer purchasers the opportunity to, upon settlement, when the valuations come in for the buyers, if that is below their purchase price, we will reduce the contract amount to that valuation price. So effectively, we guarantee any of your buyers that that purchase price will be supported. If it goes below their purchase price,
You'll make the adjustment.
we will make the adjustment so that no buyer will be buying a property from us that is less in value than the amount that they paid for it.
Well, just throwing a curve ball in there, what if the valuation comes in higher than the purchase price?
Well, Ron,
You
will
give
be
me that
frozen.
extra, but you give me, it's break even.
It's break even. No price rises. It's only there as a support for any buyers to demonstrate that we are so confident in our pricing that we are prepared to support it and back ourselves by saying to any buyer that is interested in any of our properties here in this project, we offer to reduce the contract price in line with any valuation that may come in lower than the contract price.
Okay. Just qualifying that, it has to be a valuation conducted by the funder. So we have the credibility there. The funder will notify the valuers. And
sure.
So you just can't go along and get a valuer and then purposely reduce the price. It's got to be done through the system.
That's right.
So it covers you.
Yeah.
In all the time that I've been in the business of real estate, which goes for over 35, 40 years, Bill, I've never had that kind of an offer. So I thank you so much for it. Pleasure. So the people can be purchasing at absolutely 100% security. They're paying the value.
Yep.
I've got the checkbook to make some adjustments.
Yes.
Understanding that as well, and that's for 10 sales, I believe.
Correct. 10 sales.
You've signed 10 checks, so
yes,
there we go.
Pre-signed.
And if I could just talk about now the opportunity for rentals is strong in the area. As we're experiencing now, we're already feeling through our rental departments throughout Australia the shortage that's out there. We're already experiencing it, and we're only just starting to get into that timeline of the stock being scarce,
right.
but we're already experiencing. In fact, I was in Melbourne last week, and we've just settled a couple of properties that we sold 2 or 3 years ago, and they were around 380, a little bit out of the ring in Melbourne, and my girls put them on realestate.com at $450 a week, and I said, look, isn't that a bit excessive, $450 a week? I said, shouldn't it be on for $380 to $400? They said, Mr. Cross, we've had 12 applications already at $450. So even I'm being probably shaken up a little bit by the strong rental demand out there. So Brisbane's the same, I take it, would it be?
It is, Ron. And once again, we've got a very prominent group based in Brisbane that have also said to us that the rental market is very tight in this particular location, and we already would have tenants ready to move into any investment properties upon settlement. So within days of settling any purchase with us, there would be tenants ready to move into that property.
Oh, lovely, lovely. So we have some questions, I believe. Thank you.
Yeah, good afternoon. It looks like we've just had a question come through in the live chat. Asking what the vacancy rate in the Fortitude suburb, Fortitude Valley sort of greater area, Bill. Do you have that sort of information?
Bill would have that. I think the vacancy factor for the whole of Brisbane would be under 2%. I believe the last stats that I looked at, I haven't just looked
The
at them
vacancy
today.
rate, as I mentioned, it's very tight. And as I've just mentioned, we have tenants already inquiring and ready to move into these properties on completion. So the building, as I mentioned, will be finished in most likely late November this year, and within days of the building being ready for occupation, we have tenants ready to move into those apartments. So we see no issue whatsoever with rental demand, and it's only going to continue to grow as well with the infrastructure that's going into this area. We've got new supermarkets and picture theatres, and it's right at the back of us.
Oh, look, Bill, the area is first class, and the cafes and restaurants there are just wonderful, ultra modern. Even the fruit shops are boutique and beautiful. It's just amazing to walk around Fortitude Valley. Yeah. And you've got cinemas there, you've got everything there. Yeah. I would suggest that leave the rental factor to ParkTrent. We're experts in what we do. We'll be getting tenants for you for sure. And just on the screen now, you see infrastructure boom. It's the Brisbane market. I think there's $15 billion under work at currently. Yeah. We've also had some massive promises by both parties, Labor and Liberal, for the election. We also need to just quite quickly touch on some of the changes that Labor are proposing to negative gearing, which will not affect this product because it's brand new.
That's right.
But they are going to limit negative gearing to new products only. But one of the things that will affect people that come into the marketplace from the 1st of January 2020 is substantial changes to the capital gains tax.
That's right.
As we are aware now, if you make a profit on investment properties or share transactions or profit on any investment opportunity, you'll pay tax on only 50% of that profit. But under Labor's changes, which are their platform, it's going to happen, you'll pay tax on 75% of the profit. So these are big changes. But we've been assured by the leader of the opposition, Mr. Bill Shorten, that everything that's already in vogue, everything that's already happened, will stay and be exactly the same under a grandfather clause. So it's wonderful that people make a move now as soon as they possibly can to get in and conserve their position with the capital gains tax, because that's expensive to be paying that extra 25% tax on that extra 25% of your profit.
Correct.
Do you agree with that?
That's right, Ron. Yeah.
And there's also some massive changes with people wanting to set up a self-managed super fund and buy investment properties. It's going to have a limited lifespan. So if you're thinking about looking at buying a property in a self-managed super fund, you need to press the trigger now or make the step now to make that happen, because there will be changes and they're not going to allow us to do recourse borrowings in self-managed super fund to purchase investment properties.
That's right. That's right. Now's the best time to buy, Ron.
Yeah, okay, so this is an offer that we've got on the table right now. And Bill, what this offer was, and I've got the checkbook, so we'll just put that to one side, but it gives you an idea how flexible you are with your offers. Yeah. So what it means is, if I was coming along and I was buying a $400,000 apartment, the desired deposit on that would be $40,000. And what you've been kind enough to do for a number of our clients in the past few weeks is that the clients have paid $10,000 deposit, and you've paid on their behalf the balance of $30,000. So we've still got that program to work with.
We have, Ron. We have still got that program. You've got the checkbook, and we're further underpinning it by the valuation support.
By the valuation support, which you can't make it any easier, can you?
We can't, Ron. We can't make it any easier or any affordable to buy your first investment property, second investment property,
or your first
home,
Ron.
Or your first home.
Yeah, you can do it. Do we have any other questions coming through? Yeah, okay. Right, so we haven't got many questions. We must have answered everything. Okay. So anything else you'd like to add to it? This is the net migration stats. This came out from CoreLogic in 26th of March 2019. So this is live and real. Net interstate migration to Queensland over the year to September 2018 remains high, although it's slightly lower than the previous quarter. Affordability and employment opportunities are the key drivers of migration. Look at that in the first quarter, 24,316 new residents came to Queensland compared to 13,985 to a state of Victoria, and New South Wales is minus 22,113. Now, taking that on top of the migration that goes to Queensland as well. Also, Bill, one of the hidden secrets about migration is, and what people don't get to know about, and not many people talk about it, is actually the visitation to Australia on a daily basis.
Yeah.
Are you aware of the numbers that are coming in every day?
They're big numbers. I don't have the specific.
24,480 every day, 7 days a week.
Okay.
Now, what happens is when a lot of them, they go north, they go up to Brisbane, they go to the Great Barrier Reef and all that, and they see the wonderful lifestyle, particularly around the river in Brisbane and the beautiful modern city that we have. And I think they've got the transport system a lot better controlled than Melbourne and Sydney there, because it's a younger city. A lot of those people go home and then work out a way they can set a program in motion to become migrants and migrate to Australia. Come either on the investment visas, on the business visa 457 or the temporary skill shortage visas, come in on those visa classes. But a lot of them see Brisbane and Queensland as the ideal place for lifestyle.
They do. They do.
And this is another one that's on there, which is from the property update. Brisbane's turned to bask in the sunlight. Now it's time to act. Migration from interstate and overseas has nearly doubled over the last few years. Job growth was at a 10-year high in late 2017. The lower Australian dollar is assisted with tourism, because our dollar today is sitting at 70 cents. That makes it very good for the Americans, the Europeans, the Brits to come over here, because they come here on holiday for nothing on the exchange rate.
That's right.
They've got a 30% discount on our dollar, which is actually helping with our tourism. Average sales price in inner city apartments increased by 87,000 to high at 767, and you've got 2-bedroom, 2-bathroom car parks for around the $500,000. And I got the checkbook, guys. Remember that, so we can make it a lot more flexible for you. A limited number of projects entered in the market. In fact, the Brisbane market is down 59% on what should come on in this year. So we've got a 59-60% reduction in available properties. It's going to make everything there super, super cool investment, isn't it?
Absolutely, right?
Yeah. Going to see the level of supply come through will catch up. So Brisbane is a city to invest in right now, and Coterie is the product to buy in. And remember, I can help you get there, because I've got the magic checkbook. Thank you.
Yeah, so it looks like we've got a couple of questions come through for you guys.
Okay.
Strata fees. Talk to us about strata fees. What are we looking at?
We've deliberately, in all of our buildings, we have a tremendous track record for keeping strata fees very, very low, and we've done it again in this instance. When we originally look at the design of a building, we consider all the features and running costs of a building to ensure that our body corporate fees and management fees of the building are very, very low. We consciously keep a very close eye on it, because we want you to maximise the return of your rent, your rental income. So they're very low in this instance, and I encourage anyone to make contact with ParkTrent, and we're very happy to provide the precise figures and fees, etc. But they're very low.
Looking at the fees, and I might give you $1 a month, they range between $40 and $50 a week, but understanding you've got the gymnasium, you've got the pool, you've got everything else, all these luxury provided.
There are a lot of developments that are far exceeding.
Oh, yes,
they're $150 a week, $200 a week in some instances, but you're quite right. Ours are sub $50 per week. Yeah. It's very low, and in most cases I believe it to be 50% lower than many other developments. So we want you to get as much of your rental income back into your pockets and as a return to you directly, rather than paying out large body corporate and building management fees.
But Bill, you also don't lose track of the fact that that's why we have negative gearing assistance in the program. Those strata fees and management fees are totally deductible.
Absolutely.
And one of the things, and I've been involved in many apartment purchases personally, and one of the things that I really, really appreciate is having a good owner's corp and a building that's well looked after, well maintained, and also the discipline for the tenants that are in there. All these things help with enhancing the value and also enhancing the rental amounts that you get. So when people say to me about body corporate, you want a strong body corporate, and the body corporate and the building is reflected in the rentals that you get.
Yes.
Solid body corporate, beautifully well kept building, you'll get higher rents for that. And remembering that those body corporate fees are tax deductible. Please don't let that be an obstacle for you making the decision to look at a wonderful investment opportunity. Can you imagine if we went back 20 years ago and we're looking at buying a nice 2-bedroom apartment in Brisbane? We would have paid probably around 80,000 to 90,000 for it. That apartment today is worth 400,000, but 20 years ago we would have been renting that for $50 a week. Now we're renting it for 400 plus a week, and it's an older type apartment. This is what will happen with this product, Coterie, and I believe personally, from the bottom of my heart, this Australian country that we have today, this election and the negativity that we're experiencing right this moment will evaporate at the end of May. We'll have either a new government or we'll still have a Liberal government. Either way, there'll be nice, clear run through, and the pathway will be very good for the next few years. We are going to see more robustity in the economy, and our population is going to grow so rapidly over the next 30 to 40 years. You've seen nothing yet to what's coming. This will be one of the most sought after places on the globe to come and live, because we have so much to offer.
That's right.
And if you're investing in Brisbane, Sydney or Melbourne right now, I can say that in the next 10 years you will reap handsome rewards because you've made the decision today, understanding that Bill McNeith coming along today, he's offered me the checkbook to do some business to help and assist you. He's also given you that wonderful guarantee of the bank valuation and the price adjustments. It doesn't get any better than this for you to become involved in property investment.
That's right. Thank you, Ron.
My pleasure.
We've got a few more questions coming through. People are just interested in how is purchasing this apartment better than actually buying a house?
Well, the question is, and I'll repeat the question, how is purchasing an apartment better than buying a house? Quite frankly, if you want to buy a house in the same area where this apartment is, you would pay $10 million for it. So you just can't buy the house. We can't afford to buy them. So you have to buy, if you want the location, the transportation, the eateries there, the entertainment there, this is right in the city. We now in the cities of the world, lots and lots of more people are going to be living in apartments. That's the only thing that's going to be available. If you want to buy a $400,000 house and land package, you have to go 60 kilometres out of the city of Brisbane and 45 to 50 kilometres outside the city of Melbourne, and probably 50 kilometres outside the city of Sydney to buy something for $600,000. So it's a price point that gets you there, and apartments are the way of the future. This is how people will be living all over the globe.
And
you agree with that?
I do, Rod, and it's a lifestyle also that if you're buying a house you've got to remember that you might have a very large garden to look after and maintain, which isn't necessarily appealing to everyone today, given that most people live a very fast-paced lifestyle. So this is a lifestyle of convenience. There's a rooftop pool with amazing views over the entire city. So, coming home from work, going up to the pool, enjoying a drink by the pool and looking over the entire city, and not having to worry about, painting a fence or mowing the lawns and things like that. So it's a great convenient lifestyle that apartment living or investment offers. Once again, as an investor, you don't have to worry about those ongoing maintenance issues. The building managers are taking care of everything for you, so you can just really sit back and relax and collect your rent.
And it's very expensive, Bill, to get a gardener in to mow your lawns and do your lawns. And as we age a little bit, we need to bring those people in. I know our own particular set of circumstances. We have a modest garden and a modest house that we've lived in for the last 30 years. But every 3 months we're spending $1,200 with a gardener coming in to trim the trees, etc. And Catherine said to me the other day, do we really need to be spending this money? Why don't we go into an apartment? So I think we're on our way to go into
apartments myself, Ron, and the convenience of coming home and going down to the pool or sitting in the sauna or relaxing and not having to worry about, mowing the lawns or cutting the bushes back or something like that. It's a fantastic way of living.
Yeah, I think it's up to yourself, but tracking apartments and houses over the last 5 years in a Residex reports that we're getting on a monthly basis, apartments and houses are actually increasing in value at the same rate right now because of the demands there and affordability. And also understand when you're looking at an investment, you have more building component in an apartment than a house and land package, so therefore you have higher negative gearing concept there because you have higher levels of depreciation.
That's right.
I hope that answers your question.
Yeah, and you sort of covered the negative gearing component as well, which was another question that came through. So if you need some more information on that, let us know in the live chat. In terms of returns and capital gains, what's sort of expected in the area?
Well, I might ask Bill to answer the question because we're looking at, I would say, a comfortable 5% rental return.
That's right.
And if you look at probably a capital value increase of between 3 and 5%,
yeah,
would that? I'm conservative.
I think so, Ron. I mean, when you look at the history of property, and you know, it's a company that I started 25 years ago. When I look back at the history of property generally across the board, you know, we've seen very conservative but consistent growth patterns in property in Australia, and I think for anybody, it's a similar discussion that you would have with buying shares. That you buy them, and the reasoning behind it is to buy the shares and sit back, and over a period of time you can expect some growth. And that's been the same case in Australian property, regardless of previous you know, unstable economic times that we may have had in the early 90s and things like that. If you look today, there's been enormous growth in property. And I think that we've always had the benefit of that consistent long-term investment approach, which will deliver some growth to you over that length of time. So, and I think Australia is uniquely placed, as you mentioned previously, to capture a lot more further growth in capital gains by way of the huge amount of population growth that we have experience and will continue to experience. We've had many decades of population growth. I think we've got many decades of it to come. And if you look at the amount of projects that haven't gone ahead in recent times, it's only going to add to some very, very reasonable capital growths in the coming years. So I think you could safely say that, you know, a reasonable growth pattern would be 3 to 4% annually. You might see some years where you capture some stronger growth than that, and you might have a few years that are below that. But on average, I think that would be a very safe figure to anticipate.
And also the important thing, Bill, is to understand if you're getting a 5% rental return, you're getting a 3 to 4% capital growth, it's 9%. Also, you're getting a tax relief under negative gearing of 1%, that's
and
10%.
The depreciation benefits.
And you're also getting the cash flows that you can run those cash flows, the rent and the taxation, through an offset account linked to your home loan account. That's a benefit that we can't measure, but it's an important benefit. Sure. So the cash flows generated from the rental, the negative gearing component, running through an offset account, build the volume up of your cash flows for your offset account. It'll save you considerable amount of interest on your home loan.
And
this is a free ride.
Ron, and buying now, you'll also capture that extra 25% in capital gains tax that will be a benefit to you.
Yeah, so you won't be paying the 50%.
You'll only be paying the 50%. So you'll also have that benefit at the end of your investment cycle when you sell.
Because that's going to be grandfathered. They've assured it.
That's right. So buying now really
is the time, is the moment.
Is the moment, because you will automatically have that extra 25% capital gains benefit.
Lovely. Good. Any further questions?
Just one in regards to stamp duty. What's sort of expected? What kind of concessions are available for property purchases in the Queensland area?
Well, in this instance, as Ron has continually mentioned, he's got the checkbook there in his hands. He's free to use it as he sees fit. So if stamp duty clearly is a concern to anyone, I welcome them to discuss what those amounts are directly with Ron, and I'm sure he'll be very willing to assist any buyers in that regard.
And also talk about first-home buyers. This in the Queensland first-home buyers incentive program that the government has, stamp duty up to $650,000 is absolutely paid for. Also, you have a $10,000 assistance package from them, and ParkTrent will help and contribute as well to the first-home buyers. So if anybody's want to buy the first-home buy, it's an apartment, they can do that in there. And also just to cover that, which the people that are logged on today, if you have children that are looking to get into the marketplace and they're holding back because they don't want to confuse the situation with getting the first home buyers grant, you can buy investment properties, and providing you don't live in it for any time at all, that investment property does not disqualify your future first home buyers grants. You're entitled to your first home buyers grant. So you can have 1 or 2 investment properties and still get the first home buyers grant sometime in the future. Wonderful.
So
isn't it great?
It's
so
great,
easy
Ron,
to do business in this country.
It is, as you mentioned, first home buyers are uniquely placed to pay no stamp duty.
And also get a $10,000 incentive from the government.
That's right.
And
further supported by you, Ron, and also the valuation guarantee. So I would say, Ron, that there would be no opportunity as strong as this
to get into the market.
Anywhere else in the country by any other development group.
In the world.
I would go that far. Ron.
In the world. I would say in the world. And look, if you'd like to find out more, please book an appointment. We can get to you, never mind where you are. We can do it on Skype. We can have a customer service department ring you and make an appointment. I'm happy to come and visit you with you in your place of business or your home. If you're busy, like I'm busy, my people will make a time that suits both of us, and let's sit down and talk a deal. Let's do some business. Let's get you started. People that I met 25 years ago and sold them investment properties, they ring me up now, say, Ron, I've just sold my investment property. I've made $700,000. And you know, when we bought that property from you, we had 2 minds. In fact, we were going to cancel it, but you came back and seen us and reassured us it was a good thing to do. This is the next 5, 10, 15 years of your life cycle. If you're having difficulty putting your head around it and making a decision, think how difficult it's going to be for your children and your grandchildren in the years ahead, because our population today is just over 25 million. In the next 45 years, it'll be 50 million. What does that mean? It's taken 270 years to get to 25 million, but we're going to double it in the next 45 years. Does that mean there's going to be opportunities for people? Of course there are. The people that are not faint-hearted, the people that make a move and go forward. And what better arrangement can you have? The guaranteed and valuation, the checkbook to help and assist, massive amounts of rental demand, declining stock availability. All these things are falling into place for you. And remember, massive changes in the capital gains tax situation and also negative gearing. And now is the time. You cannot afford to delay any longer. You agree?
Thank you, Ron. I absolutely agree with everything you've said there. Thank you.
Okay. Ladies and gentlemen, we'd like to thank you, and I'd like to thank Mr. McNeef for coming along today and coming to Studio One.
Yep.
We'd like to welcome you back sometime, but particularly when you're back in Melbourne with another development after we do this one there. And then we can link up again with our clients and offer them some wonderful opportunities.
Thank you, Ron.
Thank you so much. And ladies and gentlemen, thank you for taking the time to be with us today.
Thank you.
Please remember, book an appointment. I'll personally come and visit with you and discuss this wonderful project.
With the checkbook.
With the checkbook. Thank you so much.